Hello and welcome to Chartmill. In this video we take a look at the screen possibilities in Chartmill with regard to pre- and aftermarket activity. And for this video we will mainly focus on pre-market activity as it can give us important information about specific stocks. The advantage of scanning pre-market activity is that you'll have a very good idea in advance which stocks are already getting a lot of interest before the official opening hours. However, do not think that the trend a stock shows in the pre-market will automatically continue during normal trading hours. So let's start with the predefined basic screens that you can use in the platform. In the stock screener, on the performance tab, under the signal tab, there are 4 predefined filters available. Note that these screens will only give results during the extended hours. Normal opening hours for the major exchanges in the US are from 9:30 a.m. until 4 p.m. and the pre-market goes from 4 a.m. to 9:30 a.m. The aftermarket hours run from 4 p.m. until 8 p.m. A total of 4 predefined screens are available: pre-market gainers and pre-market losers, and aftermarket gainers and aftermarket losers. Using the extended hours view, you can see the pre- and aftermarket quotes and volume of the results. Extended hours charts are not available. In the left menu, there are 2 shortcuts available under the tab Stock Market. This is the easiest and quickest way to obtain an overview of the pre-market movers. If we choose pre-market movers, you immediately get an overview of the stocks that are already traded before the opening of the stock exchange. In the left column, stocks of which the price is rising. On the right column, the pre-market losers, of which the price is falling. If you press this button, the list will be opened in the stock screener. Important: in regards to the pre-market movers, you can only choose the view Extended Hours. The interesting thing about this screen is the pre-market volume, especially if you compare this volume with the normal average trade volume measured over the last 50 days. It gives an instant picture of how popular a specific stock is. In the overview, you can rank these stocks based on their percentage increase, from high to low or vice versa, but also, for example, based on their average traded volume during the regular trading hours. This list of pre-market gainers will provide interesting insights for many traders. But Chartmill can dig even deeper. With the help of a few custom indicators, we can further refine this first broad selection. Imagine, for example, that you are only interested in stocks that rise pre-market more than 15% but less than 40%. Moreover, you want the pre-market volume to be at least 100,000. With the help of the Custom Indicator tab in Chartmill, you can easily do so. The Custom Indicator tab allows you to make comparisons. In this case, we choose, for the left side of the equation, the property pre-market change. We express the equation itself as greater than, or, if you want to, greater than or equal to. Finally, for the right side of the equation, we choose the property constant, where we enter the minimum rate of increase, in this case 15%. Close the custom indicator with Enter. Next, we do this all over again, so property pre-market change, but this time the equation itself is defined as lower than, and for the right side of the equation I select 40. All that remains to be done is to set a final custom indicator for the required minimum volume. So again, left side of the equation property, pre-market volume, the equation itself higher than, and finally the right side of the equation constant 100,000. And there you go. Chartmill now shows only the stocks that meets your own pre-market criteria. A final word on the pre- and aftermarket activity and what you should definitely pay attention to. Most platforms also allow individuals to trade in these extended hours, but be aware that there are certain risks associated with trading outside the regular opening hours. Lower liquidity. In the extended hours, there are significantly fewer traders present. The ability to buy or sell shares at the appropriate price will therefore be lower. A larger spread, which is a logical consequence of the lower liquidity. The difference between the buy and the sell price is larger, so always use limit orders for new long or short positions. Nothing new here, by the way, this applies also for orders during the regular trading hours. The volatility increases during these extended hours. Because of the lower volume and the larger spread, Specific events that may be important for the stock price will have a greater influence. The announcement of important news, for example, can lead to very large price fluctuations. So, if you do want to trade during the extended hours, be sure to take into account the issues mentioned above. However, even if you do not trade in these extended hours, this period remains interesting for those who only trade during the regular opening hours. There are even specific trading strategies that have just been developed on the basis of pre-market information.